I have some very beautiful trucks over here. I took them on lease not for transporting anything, but to help me to explain you the concept of lease modification. Let's see how while building understanding around lease modifications. We will take a brief overview of the concept and then we will take some practical examples to understand it better. So as the name says, lease modification is a modification in an existing lease contract. But this standard deals with only those modifications which will have financial implications. It has provided the guidance to identify such modifications and their recognition and measurement in the financial statements. To make it easy to understand, I have created a mind map and have summarized all the modifications into 4 broad categories. So let's understand it. First is increase in scope by increase in underlying asset. Here you can see that there are 2 trucks and then there is an addition of 1 new truck. We will call this addition as an increase in scope. And when there is an increase in scope, ideally there should be an increase in consideration as well. And here we can see that there is an increase in consideration also. But this is the point where we need to be very conscious. As the standard says that the increase in consideration should be in line with the standalone price of the increase in scope. Means if the standalone lease rent of 1 truck is 500, then the lease rent of this new truck should also be 500. And if this condition satisfies, the modification will be treated as a separate lease and we need to measure the lease liability and ROU for this increase in scope, considering it as a separate lease contract. Now suppose if the increase in consideration is not in line with the increase in scope, then what? So for example, the lessor quoted $1,300 for the 3 trucks instead of $1,500. That means there is some discount element in this offer. So in this case, standard says that this modification won't be treated as a separate lease and we need to remeasure the existing lease liability and ROU on the effective date of the modification. And for this, we will use the discount rate which is effective on the date of modification. Now coming to the third category. The first 2 categories were about increase. This one is about decrease in scope. For example, instead of 2 trucks, the lessee only need 1 truck. In this case again, we need to remeasure the existing liability and ROU by using the revised discount rate on the effective date of the modification. And if there is any gain or loss as a result of this decrease in scope, then that needs to be recognized as well. The last category is for other modifications. For example, the lessee later decided to increase the lease period or revise the lease rent. In that case, we need to remeasure the existing lease liability and ROU. Means only the first category will be treated as a separate lease contract and all other categories will be treated as a modification in the existing lease contract. We will now take some examples to understand how to implement these modification guidance. I have put some numbers to our truck example that we took in the overview. A lessee took 2 trucks on lease and the relevant terms of the lease contract are as under. Lease period is 5 years, lease rent is 1,000, useful life of truck is 10 years, incremental borrowing rate is 5%. Let's first work out the lease liability on day 1 based on PV of lease payments. In this table, PV is computed considering lease rent of 1,000 per annum and discount rate of 5% for a lease period of 5 years. And this is the accounting entry which the lessee will pass on day 1. It will recognize the ROU and lease liability. At the end of 3rd year, lessee expressed his interest to take one more truck on lease for 2 years. Lessor has happily offered the truck on the same terms and conditions of the existing lease contract. However, at the end of 3rd year, the incremental borrowing rate was 6%. As we can see that in this case, the increase in lease consideration is in line with the standalone lease rent of the truck. And we can comfortably say that this modification falls in the first bucket of lease modification, which we discussed just now and should be treated as a separate lease. In this table, the lease liability for the new truck based on the revised IBR of 6% is worked out. And now we will pass the accounting entry for the modification adjustment by increasing the ROU and lease liability with the additional amount. Here in this table, I have given the movement of lease liability wherein the interest is first computed at the rate of 5% and for the new truck at the rate of 6%. And in this amortization table, the amortization has been worked out with a useful life of 5 years. We can see that because of the increase in ROU in 3rd year, the amortization has also increased in the last 2 years. And that is it. We are done with our first example. I hope now you are very clear on the concept of separate lease modification. If you still have doubts, watch the video again, do some practice and you will get it for sure.